Welcome to Bloomberg Technology. I'm Emily Chang in San Francisco. Stocks rising on renewed optimism for a second day, in part due to more optimism about a COVID-19 vaccine. Pfizer may be the first to reveal results from its late-stage trials. The CEO saying it is likely the U.S. will release a vaccine to the American public before the end of the year. Also, Oracle shares rising on news the company could be the winning bidder for TikTok, but it won't involve an outright sale. TikTok's Chinese owner, ByteDance, has rejected Microsoft's bid. We're going to have more on the details in a moment, but first I want to bring in our Bloomberg Markets reporter, Sarah Ponsek, who's been following the ups and downs today. Tech leading the comeback today. Also, this late-breaking news about Nikola and the SEC examining the company over some fraud allegations from short sellers. How is this impacting shares right now?
Right. So if we look at Nikola shares right now, the last I had checked a couple seconds ago, down about 8% or so after the market closed. So what we did just hear is that the SEC is examining Nikola to assess the merits of this claim, which came from the platform last week called Hindenburg. So there you see it. Nikola shares taking a hit. We had already seen shares fall about 35% or so from last week after these allegations. And I mean, it's safe to say it has been quite the ride for Nikola. It has been a retail favorite stock, still up more than 200% this year, but certainly getting dinged right now and certainly getting hit pretty hard after these original allegations took hold and now getting even more focus with the SEC taking them on.
And of course, this on the back of GM taking a huge equity stake in Nikola, something there that we're going to continue to follow. Let's talk a little bit about tech more broadly today. Obviously, we had the TikTok news, continuing developments. It seems that Microsoft now is out. Oracle is in the leading position, but a potential deal still under review. Details still to be worked out. Oracle shares did rise, and we didn't see a huge ding for Microsoft and Walmart either. Walmart could still be part of this.
Right. So there are reports that Walmart could still be part of this through the e-commerce division, that TikTok might partner with Walmart on e-commerce. So if you look at shares, what the reaction was throughout the day, yes, we did see Oracle shares spike the most. However, we did see Microsoft and Walmart shares in the green as well. Now, if you do look at what analysts are saying about what is going on with Oracle and this TikTok bid, first of all, the structure of this deal is still evolving. It still seems a bit unclear. At the same time, what happens next? It has to head to the U.S. government for a national security review. And this looks like it's going to be more like a corporate restructuring than an actual sale of TikTok's U.S. assets to Oracle. But analysts seem a little bit confused over this. There are some mixed reactions. If you look at what Citi analysts are saying, for example, they wrote that they could not find a sound rationale for Oracle to focus on TikTok, as a relationship with the company isn't likely to change the competitiveness of Oracle in cloud. So there you could see a little bit of confusion. Some, though, do look at this as a positive, just the fact that it's another potential diversified revenue stream.
All right, Bloomberg, Sarah Ponsek, thank you so much for that update. We're going to talk a little bit more about this TikTok situation right now. Oracle moving into the leading position. Treasury Secretary Steven Mnuchin saying the U.S. government will now undertake a two-track national security review of Oracle's TikTok proposal. It wouldn't necessarily involve an outright sale, but Oracle potentially taking a stake in a new company, more of a corporate restructuring, if you will. I want to bring in Shishir Mehrotra, co-founder and CEO of Coda and a former Google vice president of product for YouTube. Shishir, thank you so much for joining us. You worked at YouTube for many years, and I'm sure you've watched TikTok's rise with some fascination. What is your take on this latest turn of events?
Yeah, thanks, Emily. I think it's been a lot of fun watching the TikTok rise. I think that new social interactions like this don't form very often, and it's super interesting to watch when they do, and how sticky they are. I mean, I can speak for our own family. You can't walk into a room. I have these two young daughters, and you can't walk into a room without one of them doing a TikTok dance. So I think the level of impact it's having on society is very large. And then we pair that with this really interesting dynamic with multiple governments and multiple companies, and it's super fun to watch.
What do you make of Oracle, though, as a potential owner or partner, given that Oracle was certainly the more far-fetched candidate in this particular situation?
Yeah, well, at the high level, as your last segment pointed out, it's not done yet, and so there's still room to go. And it's interesting. Usually, M&A negotiations are two parties, and this is at least four with Oracle, ByteDance, and the respective governments. So I think there's still a lot to be played out. I think the story has changed a lot in the last few days. I mean, in terms of it being Oracle versus not, one of the obvious things here is that it can't really go to the companies that everybody would think are obvious for antitrust reasons. And so inevitably it's going to end up, if it has to get sold, it's going to end up with a company that may seem unnatural. So within that set, I think, Oracle may be as good as any. I'm not sure I have a good reason or bad reason for that. I think the more interesting thing is what's being bought, and depending on what's being bought, each company has a different interest in that.
So what is interesting about that, and how big a threat do you think TikTok in a new potential reconstitution is to a Facebook or a Google, the companies you alluded to, who might make sense as owners but can't buy it for antitrust reasons?
Yeah, right. I mean, I think, though I look at it, there's sort of three things here that are being talked about in terms of what can be bought. There's the product, which is, TikTok, the experience, including the algorithms, the users, the content. There's a second set, which is just the user and the content base, and there's a set of discussions around can the algorithms and so on be split out, and the buyer needs to rebuild the product. And then the third is really a big infrastructure contract and the right to host and serve data. And interestingly, this deal, and it's hard to tell exactly where it's going to land, but it's somewhere between number 2 and number 3, in that it's clearly not the overall product, and somewhere between that user and content base and the infrastructure contract. I think my viewpoint on it is that and maybe this is a little bit contrary to many other people's, I think that the algorithms and so on are important, but maybe less important than people might think. I think that in this space, algorithms for products like these tend to be tuned to a very specific set of training data, and over time they need to be upgraded. And I also think a lot of the challenges are in scaling the algorithms. And so I think the idea that this deal is going to end up somewhere between sort of the second and third set of those buckets is reasonable.
That's definitely counterintuitive, that the algorithms might be less important than you'd think, considering that they've been pitched as the sort of crown jewel of any sort of TikTok asset. What do you make of the political aspect of this? The fact that the president has essentially, forced such a deal, day by day. Again, nothing done yet. But, what are the implications for running a business in the United States, in Silicon Valley?
In some ways, it's not new. In some ways, it's very new. I mean, anyone who's run a large media platform, as we did with YouTube, is you get used to the idea that you have to operate differently in every single market you operate in. And we operated in dozens of markets for YouTube. And, I had to be very familiar with what the political dynamics were in each place. And so from that perspective, sort of just another day at work. The big difference in the world today is, historically, or at least for the last decade, those markets have been somewhat homogenous in terms of their interests. And you could operate in one market and kind of presume that most markets would be about the same. All of a sudden, we're in a very fractured geopolitical climate. And, I think the idea that these media platforms are now caught in between that fighting is interesting, somewhat inevitable. I mean, I think these media platforms form almost a second form of government. They're the ones regulating speech and so on their platforms. So the idea that you have to interact with these is not surprising. The fact that it's so fractured is surprising and quite challenging, I think.
A second form of government, that is quite profound. I do want to talk to you a little bit about the trend toward working from home. Of course, Coda is one of those companies that is helping workers be productive remotely. I interviewed the CEO of Netflix last week, Reed Hastings, who wants people to come back to the office as soon as possible. No working from home forever, if he has anything to say about it, because he thinks people are just more productive in the office. What's your take on that?
Yeah, I mean, I think Reed's view on it got well publicized, since it's contrarian. And I do think it differs by company. And some companies have a culture that leans into it and some companies don't. At Coda, we've leaned very much into that distributed culture right from the start. And so for us, it was very natural, and we shifted towards working from home. We watched a lot of our employees choose to live in other parts of the country. About 10 to 15% of Coda employees have actually physically moved their homes, sometimes all the way across the country to new places. I think for us, that's here to stay, and I think for a lot more companies, it will be here to stay.
All right, Shishir Mehrotra, CEO and co-founder of Coda, thanks so much for joining us. Obviously, we're going to continue to follow every tick and talk of this TikTok story. Coming up, similar to Microsoft Excel and Google Sheets, but potentially better. That is what Airtable claims to be. We're going to hear from Howie Liu, the CEO of Airtable, a company now valued at $2.5 billion. This is Bloomberg. Airtable, a no-code approach to spreadsheets, has closed a funding round of $185 million, bringing its valuation now to $2.5 billion. The company has more than doubled its valuation in the last 2 years, earning unicorn status with $1 billion just in 2018. Joining us now for more, CEO of Airtable, Howie Liu. Howie, thank you so much for joining us. So I believe you were on the show last when you hit that unicorn status, and high valuations can be a blessing and a curse. What do you make of that number at a time when we are in the middle of so much economic, social, and health uncertainty?
It has been a trying year, I think, for everyone. I think the first thing that goes to our mind when we think about this year is, our team, how we can be supporting them as everybody's figuring out how to transition into this, world where personal and work lines are being blurred. Families are obviously having challenges. I do think that, in terms of the valuation, we've always taken a more measured approach than perhaps the Silicon Valley mythology would dictate. And so with this round, as well as our prior one, we really spent a lot of time organically building relationships with investors to really make sure that we knew, the kind of long-term expectations and commitment that we'd both be making. And so we've never put emphasis on the valuation so much as the long-term partnership, because I think the real win for us is not the valuation change in a 1 or 2 year time frame, but can we be the biggest possible company in this multi-$100 billion category opportunity?
Now, Airtable makes it easier to create things without needing to code. And I know it's been essential for so many small business owners, even consumers, especially at this time when we're all stuck at home, working from home. What has demand been like for you in the midst of the pandemic, and what are the major use cases that you're seeing?
So one of the interesting things about Airtable is when we first started the company, we thought this would be much more of an SMB and probably even more of a tech startup oriented customer base. So early on, we imagined, it'll probably be other startups like us that go and use our product. Lo and behold, we were kind of surprised by just how much diversity of usage we got even before COVID. And so we were getting cattle farmers and lawyers, as well as major enterprises doing things like, film productions or major, product launches with Airtable. I think what's really changed in the time of COVID is, with enterprise especially, we're seeing this kind of second wave of digital transformation that's happening, that's being accelerated by COVID. The first wave was really about just getting communication tools in place. So obviously, when shelter in place hit around the country and around the world, everybody was scrambling just to figure out, how do we communicate? It's almost like in the Maslow hierarchy of needs for the enterprise, communications is the first layer. If you can't communicate, you can't do anything else. But now that that's mostly out of the way, I think, most companies have Zoom or Slack set up. I think that there's, this opportunity to really come in and help create structured work in a much more, agile, digitized way. And that's where Airtable comes in with the app platform approach.
You obviously have Microsoft with its Office suite of software, Excel, Google with its own productivity suite. What sets Airtable apart from them?
So this was a really interesting year for us because I think Microsoft and Amazon actually launched their own more direct competitive offerings in this space. So this was the year that low code as a category really became very validated, I think, by the market. And so really with our product, I mean, we differ from the existing Office suites, spreadsheets, et cetera, because Airtable is ultimately not just a better spreadsheet, but an app platform. You can actually build real apps, and that's one of the big exciting aspects of this launch is that we're taking the product one step towards, a huge step towards being able to customize, even deeper applications. So the film production use case, for instance, can build an even more specific add-on to Airtable using code if they want to do something like resource management in a very unique way. I think that our focus is really going to be on continuing to differentiate the product. This is not a product where the category becomes commoditized, but rather one where differentiation really matters, and winning the hearts and minds of creators, the people who are actually going to go and build apps. That's paramount to success in this category.
We're seeing a lot of companies, benefit from work from home trends, but also struggle to understand how much of this is pull forward demand, how much of this is new demand, how much of this is going to be recurring demand. Post-COVID, or when we are in some sort of new normal, do you think this growth will be sustainable? Could it plateau even?
So I think that the broader trend is durable for us. This is not just the kind of early and initial hit of digitization because of the remote work phenomenon. I think this was something that was already happening and really at the very beginnings of the trend. And this idea that everybody needs apps is not yet mainstream. I don't think we're yet pulling forward the majority of growth that there is to come. Rather, I think there's going to be 500 million new apps created in the next 5 years. That's something that analysts like IDC have cited, but even Satya has said on stage. We're really at the very beginnings of the appification of every part of the enterprise. And, we hope to empower more creators with a better solution than any other product out there.
All right. Airtable CEO and co-founder Howie Liu. Howie, thank you so much for joining us. We'll see you in hopefully sooner than another 2 years from now. Thank you. Coming up, another big deal took shape over the weekend. That is Nvidia agreeing to buy SoftBank's chip division ARM for $40 billion. Details on the chip industry's largest deal ever. Next, this is Bloomberg. Welcome back to Bloomberg Technology. We do have some breaking news about the TikTok deal. More details trickling in. We've now learned that TikTok is planning to give stakes to not just Oracle, but also Sequoia Capital and General Atlantic, two of the earliest shareholders in TikTok. Again, we're still trying to figure out the mechanics of how this would work. Sequoia, an early investor in the company, so perhaps this means Sequoia also gets a stake in the reconstituted U.S. company, something we're going to continue to follow as more of these details on a potential structure trickle in. Meantime, turning now to that big Nvidia ARM deal. Shares of SoftBank soaring after the company reached a deal to sell the chip designer ARM to Nvidia for as much as $40 billion. Meantime, Bloomberg has learned that SoftBank will be revisiting a plan to go private. Joining us to discuss, we are joined by Daniel Newman of Futurum Group. Daniel, thank you so much for joining us. What's your take on this?
Well, I think this is just a huge deal across semiconductors. In fact, it's the largest semiconductor deal in history. Nvidia had a ton of momentum in its GPU business, AI, consoles, edge, and then the data center. But this makes the company really significant and relevant in the CPU space. It scales their business. And in the smartphone space is another area that I really see it significantly impacting the business, as ARM has influence across the entire smartphone space. And now NVIDIA is suddenly a part of that. And so many customers of ARM are going to be coming to NVIDIA now to get access to the intellectual property that ARM has been developing over the past years, that has really been driving technology and driving devices at the edge, compute. and these smartphones that are one of the most important devices in our lives today.
What does this mean for SoftBank? Obviously, the company has had its struggles, and this is an important exit for them.
Well, that's exactly it. I mean, there was only a handful of companies that really made sense, and Nvidia makes a lot of sense. And I know there's going to be some that are going to probably not be crazy about this deal, but by and large, those are going to be companies that maybe feel they missed an opportunity that could have possibly capitalized on such a deal. But for Nvidia, there's not a lot of overlap. There's not a lot of direct competition, if any, as Jensen Huang alluded to. It expands the business into new areas. One company really builds the chips. The other is building the intellectual property. So it's complementary. And for SoftBank, it got them an exit. And at this point, with the hardship that SoftBank had been facing, such a large holding in its portfolio, having a solid, profitable exit, maybe not as profitable as some would have liked, but it was an important transition, and it fell into hands that I think can really continue to propel ARM's momentum forward.
Do you think we're going to see more M&A in chips? I mean, on the one hand, some CEOs have said valuations are too high. On the other, there are experts saying, this is the perfect environment for M&A, especially when you have some companies desperate to make a deal.
Well, I think right now, big, smart companies like Nvidia and, you look at Qualcomm's and Intel's, I think they're always looking for opportunities to make smart acquisitions. You also see Apple vertically integrating. And of course, now Apple is going to be a customer of Nvidia after this is done. I think the continued momentum for M&A will be something that we'll have to watch. In this case, it was a scale deal. These are big numbers, but as I alluded to in a piece I wrote, this could easily help to take Nvidia's market cap towards half a trillion and beyond. And so that $40 billion that was paid was almost covered in the equity, just in the growth that the company saw as this news broke.
All right, something we'll continue to follow. Daniel Newman of Futurum. Daniel, thank you so much for your insight there. Coming up, Amazon's latest hiring spree, the company adding 100,000 new employees in North America in the midst of widespread criticism about the treatment of workers. We're going to hear from an Amazon executive next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Well, e-commerce has soared in the midst of the pandemic, and despite some logistical challenges, Amazon is now hiring 100,000 new employees across the United States and Canada. That's after an addition of 33,000 corporate and tech staff announced last week. Joining us now to discuss, Kelly Cheeseman, operations spokesperson at Amazon. So obviously, Kelly, these are huge numbers. Tell us a little bit more about what jobs you're expecting to fill and what impact these employees are going to have on the business.
Absolutely. Thanks so much for having me. So we have 100,000 new full and part-time jobs. These jobs pay $15 per hour or more. They start with the same benefits on day one that I have, and they're going to play a huge role in helping us meet demand for customers. And in fact, a lot of these roles are at new buildings. This month alone at Amazon, we'll open up 100 new buildings across our network, and those are fulfillment centers, sortation centers, delivery stations. That's where we get your item out to you, the last mile of the package getting to your doorstep, and also at our air hubs. And so the roles are across those buildings, and we're both feel very fortunate that we're able to open new buildings at this time and to bring 100 new buildings to communities around the U.S., but then also to be adding jobs at the buildings that we have today across the fulfillment and sortation network.
Now, typically over the holiday season, Amazon does hire additional workers. How is this different? Are these permanent jobs as opposed to temporary holiday season slots?
Exactly. So these are permanent roles. Stay tuned on seasonal hiring because it's still early in the season, and I would expect that we would also potentially have roles to fill seasonally. But these are for individuals who are looking for, regular full-time or part-time jobs.
And tell us more about the locations of the 100 new buildings. Where are these new buildings going to be popping up?
Yeah, glad you asked. So, we had a building open last week in Florida. We have a new building in Spokane, Washington. So these, buildings are all around the U.S. And with the roles, it's quite a bit of jobs. Over 3,000 jobs in the Seattle area right now we have open, over 5,000 jobs in the Chicago area, which have a starting rate of $15 per hour or more. And we're offering also sign-on bonuses for individuals. Those range from $250 all the way up to $1,000 as people join. So we know there are so many impacted right now, given what's going on, where people are out of work. And these roles really span across most states in America. And anybody can learn more at amazon.com/apply.
Now, Amazon has faced a significant amount of criticism throughout the pandemic, especially from warehouse workers who've complained about working conditions. Some workers have felt unsafe. Some workers have said, they're not paid enough. There was a protest in front of Jeff Bezos's own home where workers were calling for $30 an hour as opposed to $15 an hour. What's your response to these workers' concerns?
Well, we take every concern seriously. So for me and the team who are on the front lines of hearing from individuals, one, we welcome the feedback. But two, I would say nothing has been more important than the safety of our teams since, for a long time, really, always, but particularly with the pandemic. We feel actually that we'd love to see a company who handled it more quickly than Amazon. We started early. We immediately hired an epidemiologist specialist who worked with our already existing safety team, for which we have thousands of members who already work on safety every day. We rolled out more than 150 process changes and improvements across our building. And, I can only really speak, again, for myself. I've been to several buildings since coronavirus started. I'm in the buildings quite regularly. It's quite frankly my favorite thing and place to be, being an Amazon employee now for over 8 years, is actually to be out in the field at our fulfillment centers, at our delivery stations with drivers. And the reality is the vast majority of employees feel like we're doing a great job. We have a mechanism at Amazon where we actually ask all employees, a question of the day. So every day when I start work, I get a question related to how I'm feeling about working at Amazon. That's nothing new, but during the pandemic, we have shifted, and the questions for the employees in our hourly network are all about the pandemic response and how they're feeling about working at Amazon right now, given everything that's going on. And our employees are playing such a vital role in serving their communities. And the reality and the facts show that well into the 90th percentile of employees, when asked, how do you feel about Amazon's response to the pandemic? Do you feel safe at work? Do you have the PPE, the mask and supplies you need? The vast majority of respondents, well into the 90 percentile, feel extremely great about our response. And anytime we do get feedback, we respond and we work hard to be better. But nothing along the way has been more important than keeping our employees safe. And having gone to many of the buildings, I've seen that firsthand.
All right. Appreciate that additional context. Kelly Cheeseman, Amazon operations spokeswoman. Thank you so much for joining us on this news. The company is hiring 100,000 new employees in the U.S. and Canada. Well, as climate change increasingly becomes a front and center issue for governments and companies worldwide, HP Inc. is a company that has flipped their printing business to become more sustainable. As part of this week's Bloomberg Green Festival, I caught up with HP Inc. CEO Enrique Lores and asked about how the recession, the economy, COVID has impacted their business. We should note that HP is a founding partner of Bloomberg Green.
We have seen both sides of the impact of the current situation. On one side, as employees are not in the office, they are printing less in the office, and this has had a negative impact. But at the same time, with more people working from home, more kids learning from home, this has clearly increased the demand for all of our home business. At the same time, we also have a very important PC business. And what we have learned during the last months is that PCs have become essential. If you want to work from home, if you want your kids to learn from home, if you want to also entertain from home with gaming, you need a PC. And what we have seen is that we are moving from a paradigm where there was a PC per household to a paradigm where we need a PC per person. And this has really increased the demand for PCs because today PCs really are a core product for almost everything we want to do from home.
Absolutely. Now, you mentioned what you're doing in terms of planting trees to make up for the paper that people are using. What about the actual creation of the PCs and the printers? What are you doing to make the supply chain from start to finish more sustainable?
We are working across all elements of the value chain. It starts from what materials do we choose when we design the products to make sure that we use, for example, ocean-bound plastic to avoid that plastic goes back to the oceans. And we launched last year the first PC that was using ocean-bound plastic. We look at what programs do we use in terms of recycling and make sure that when a customer uses a cartridge, there is a mechanism for that customer to send the cartridge back to us so we can send a new cartridge and we can recycle that product. We look at the energy that we consume both in the factories and in our offices to make sure that we minimize the consumption of energy. We look at the usage that we do of plastic for only one time and look for any opportunity that we have to reduce that and to mitigate that. Is really, as I was saying before, values are very important for us as a company. Minimizing and actually helping the planet is one of our values. And across every action we take, we really have this in our minds as we define and drive our businesses.
Meantime, the supply chain is long, and I wonder, does your supply chain go all the way to China? And have you been able to maintain the integrity of the supply chain given all of these geopolitical issues? Can you still make the choices you want to make in the supply chain when the world is just so complicated?
I think you said it right. The world is complicated, and we think it's going to be getting more complicated during the next months. So we are looking for opportunities to continue to make our supply chain more resilient. We have learned during the crisis that the dependency we had with a few countries could be a problem if we face a situation like what we have faced during the last months. So we're looking for opportunities to make it more flexible, to make it more local, to bring more production capacity closer to where customers will be using our products, and we are driving that internally. This is also a great opportunity for our 3D and digital manufacturing business, because we are not the only company that is going to be facing the need to drive this change. Many other companies will have to move their production capabilities closer to their customers. And when doing that, they will be looking for the flexibility, the reduction in delivery time that 3D printing brings. So it's something we are driving internally, but also an opportunity that we have to grow one of our businesses.
You mentioned you think the world will get only more complicated. How so?
Well, if we look at the trends that we have been living in a world where globalization was accepted and supported around the globe. This is today being challenged, and we are seeing tensions between the US and China, between many different countries that are going to be driving the need for us to really look at how should we operating in this new environment.
That was HP Inc. CEO Enrique Lores, and a reminder, HP is a founding partner of Bloomberg Green. You can catch more of the week-long Bloomberg Green Festival later this week, which gathers thinkers, scientists, business practitioners for a virtual event focusing on the core issues of climate action. All right, coming up, we're going to talk to an expert in digital innovation about how it is impacting higher education. More in our virtual classroom series next. This is Bloomberg. The pandemic has taken a toll on pretty much everything but tech. We have seen a boom in the tech sector since the start of the outbreak, with the S&P Infotech Index gaining over 25% year to date. So how are college graduates gearing up and preparing for these new opportunities? With us is Mariam Alavi, Dean of Scheller College of Business at Georgia Tech and an expert in all things digital. Dean Alavi, thank you so much for joining us. Obviously, the pandemic has shaken up the education system, not the least of which is higher education. So many college-bound children have, they're taking gap years in my community. They're not going to college at all. What trends are you seeing at Georgia Tech?
Well, like any other business schools, like any other university, we are impacted by COVID-19. As you mentioned, it has been a highly disruptive event, saying the least, for higher education as well. We are now in a position that our classes and delivery of education is changed, is altered to accommodate the impact. For example, at Scheller College and at Georgia Tech, many of our classes are now in a hybrid mode of teaching and learning. And what that means is that part of the classes are conducted online and some of the classes are in person, while we ensure safety of faculty, staff, and students, and we observe social distancing in a classroom setting. So
what trends are you seeing in college graduates and how they are dealing with this new landscape and looking at new opportunities, but also fewer opportunities?
Well, I guess it really depends. In some areas, in some sectors of economy, as your program has been pointing out to it, in high tech, for example, e-commerce and high tech and organizations and industries and companies that have digital products and services actually have been growing in this environment. So there are jobs there that a lot of graduates can apply for. And then in some other industries, there has been a shrinkage and there has been a negative impact and there aren't as many jobs. For Scheller College, for example, we have had, despite a COVID-19 crisis, we have had excellent placement for our students, both at the undergraduate and the graduate level. For example, at the graduate level, MBA level, 3 months after graduation, our class of 2020, we had 92% offers. And for undergraduate, we had a 91% of graduates of 2020 with job offers. These are great statistics at any time, particularly commendable in a year that we have had with COVID-19.
Do you think that higher education will be forever changed as a result of the pandemic? Like even when school goes back into session in person, we have a vaccine and hopefully life returns to some kind of new normal. How do you think colleges and universities and business schools will be different?
I think in a couple of ways. Number one, as a result of being thrown into a online learning environment, a lot of us have had great experience in terms of learning about how to teach and how to learn in online environments. So that developmental opportunities in a way has been there. So we know how to do this now. It has been very successful in many and in most situations that I'm familiar with in terms of learning outcomes for students. So I think we are going to see a lot more inclination to really be able to learn online. What I'm hoping to see is the opportunity that increasingly we as higher education, as business schools, will bring in technology in a value-added way to support learning so that we can prepare our graduates for future of work and work of the future.
So what are the innovations that you've made that you're most proud of?
Well, some of the innovations we have made, first of all, has been really using technology in an innovative way, not just to transfer everything we have always done in a classroom, now put it online, but really taking advantage of technological capabilities to be able to bring in more of an interactivity, more of a participation on part of the students in the learning process. We know that the more engaged students are in a learning process, the better learning outcomes. So there are opportunities, and we have seen the way technology has been used, for example, to be able to get all the students to answer questions and participate using chat, for example. In a classroom environment, only one person can talk at a given point in time, at a given time, whereas in an online environment, all students can respond to a question. And this really, and built on each other's answers, and really come up with more innovative problem-solving approaches. And this is really helpful because the more participation and engagement on part of the students in the learning process, the better learning outcome. So I see some of our students really taking advantage of that.
It's certainly impressive to see how schools, businesses, individuals are rising to the crisis. Dina Lavi of Georgia Tech, thank you so much for joining us. All right, coming up, we're going to be talking about Apple. Apple's first product launch of the year is tomorrow. We'll tell you what to expect next. This is Bloomberg. Tomorrow, Apple kicks off a broad slate of new products at a virtual event with upgrades to two of its most important lines of hardware beyond the iPhone, the Apple Watch, and the iPad. For more, I want to bring in Dan Flax of Neuberger Berman. And Dan, my colleague, Mark Gurman, has reported that the iPhone will not be the center of attention tomorrow, that it really is going to focus on the watch and the iPad. What are your expectations?
Emily, great to be with you as always. I think Apple is going to showcase its innovation tomorrow and really demonstrate how it's advancing in key areas like augmented reality. The phone, as you noted, we may or may not get the introduction of it tomorrow, but even if we get it next month, the key there is really that the installed base is growing, the ecosystem remains healthy, and the 5G devices should help drive better growth over the next 12 to 18 months. In terms of what we're looking for with the watch, we're expecting more and more innovation in key areas like healthcare and fitness. If you think about the watch, you have features like the ECG app to take electrocardiograms, emergency calling, fall detection. We could get better traction in key areas like sleep. There's potential for them to do things with blood oxygen monitoring. So things within the healthcare realm really enable users to lead healthier lives with greater awareness around their day-to-day activities and how that impacts them. So very exciting there, and certainly any innovation that they bring out in the iPad, we see the strong growth there, certainly helped by work from home and study from home. So should be an interesting day tomorrow with a lot more to come in the next month or so as well.
You know, we're seeing a lot of demand for iPads, especially, in the midst of staying at home. But do you think that what we're seeing now is fundamentally going to change the kind of demand we're going to see for iPads and Apple Watches in the future?
I think on the Apple Watch, that product is very much in its infancy insofar as with each generation, there's more and more capabilities that are being added. So new people are still discovering the watch in the United States, and then overseas in a lot of the international markets, it's even earlier. So I think about that as having a very, very long runway over the next several years. iPad is more mature in some markets like the U.S., but the company is seeing good growth in many markets overseas. And I think what's important overall is that user satisfaction is high and the install base is growing. I do think the current events are helping to catalyze greater interest in the iPad, and that the platform is likely to become even more strategic as a result of everything that's going on.
And so if we do get an iPhone announcement next month, what are you looking ahead to there?
Emily, I think the key things are the price points. Let me even go back one step. It comes down to the innovation, and really at its core, the iPhone success has been predicated by this integration of hardware, software, and services, and really empowering the developer community globally to build on top of the platform. that is what helps to drive the differentiated user experience, which ultimately drives value for customers and growth. What I think will be important is having devices at different price points. I think we're very early in the rollout of 5G networks, but Apple's ability to deliver product for the new networks will be important over the next few years. And then the bigger story is how the iPhone and these other products that we're talking about, wearables, iPad, the Mac, let's not forget about that,
Okay.
and then really the services business broadening the growth for this company. And that is a very interesting opportunity over the next couple of years as shareholders.
Okay. Daniel Flax, Senior Research Analyst at Neuberger Berman, thank you so much for joining us. We're going to be all about the Apple event tomorrow. We'll have everything you need to know right here on Bloomberg Technology. That does it for this edition of the show. I'm Emily Chang. Bloomberg Daybreak Australia is next. This is Bloomberg.